So good afternoon, everyone. Welcome back. This week, we'll finish up our second unit covering the financial world by talking about the banking industry. So this part of the financial world is notoriously complex and controversial. So we'll try to lay out the broad strokes in today's presentation. So just a quick, introduction before we jump in. I'm Ryan. My team and I have set out on this mission to try to spread the importance of understanding economics, finance, and business for real-world applications. So I hope that as we get closer towards the end of the program, you'll all take away a better understanding of finance and investing, as well as a greater appreciation for the learning of said fields. So let's see. Looking ahead, we're going to try to wrap up this program in the next 2 weeks with the final unit on government and politics. So for the next week, we're going to talk about financial regulation and how the legal system can have an impact on investing in the financial world. Then in the final week, we'll talk about fiscal and monetary policy and their potential effects. So let's see. Last week, we took a tour around the really fascinating and intricate world of Wall Street. So we first talked about how the term Wall Street serves two meanings. It can refer to the actual geographic location in New York City, which is home to major financial entities like the New York Stock Exchange, hedge funds, major investment banks, and brokerages. It can also act as an umbrella term for describing the overall global finance and investment community. And then we talked about the various financial assets that you can find at Wall Street and in major financial hubs around the world. So you first have stock exchanges. So these serve as marketplaces where buyers and sellers can trade stocks. There are four types of stock exchanges, but the two most important ones that you should know are the auction and the electronic exchange. So the auction exchange is a physical place where buyers and sellers can place orders through bids and asks until a price agreement is met and stocks are exchanged. And the New York Stock Exchange on Wall Street is the largest auction exchange. And then the other major type is the electronic exchange. So like the name suggests, the transactions between the buyers and sellers happen online rather than in an actual physical location. So NASDAQ is the largest electronic exchange in the world, which allows for greater trade efficiency via the internet. So hedge funds are also another major financial entity in the financial sector. These entities are investment firms designed to mitigate losses and risks with pooled money. And these entities try to deliver positive returns at all times. So even when the market's going up, it doesn't matter whether the market's going up or going down, they're always trying to deliver positive returns. And then finally, you have brokerage companies, which sort of act as middlemen that connect the buyers and sellers in the stock market. So if you want to buy or sell a stock, you can't place an order with the stock exchange directly. You can't show up to the New York Stock Exchange and say that, I want to buy this and this, I want to sell this and that. Instead, you have to place your stock trade through a stock brokerage that deals with the exchange on your behalf. And then we also covered two types of investment vehicles that are really important to consider for investing. So the first asset that we talked about is the mutual fund. These consist of portfolios of stocks, bonds, or other types of assets that are managed by financial firms. These firms create mutual funds that give individual investors like us access to diversified, these are automatically diversified, professionally managed portfolios at a very low price. So the price of a mutual fund is the net asset value per share, and this price is updated once a day after the stock market closes, between around 4 p.m. and 6 p.m. So I don't know if you guys have been investing in mutual funds, but it's always really interesting to look into. And then index funds are a type of mutual fund or ETF that consists of a special portfolio that is built for the sole purpose of tracking market indexes, such as the Dow Jones Industrial Average or the S&P 500. So these investment vehicles are highly praised for their long-term returns and are great and are highly recommended for ideal core portfolio holdings for retirement. And that kind of just sums up what we covered last week. And so let's start with what we have today. Agam.
Hello, everyone. My name is Akam Otwani, and I'm a rising senior at Forest Hills Northern High School in Grand Rapids, Michigan. Today, I'm going to talk about the introduction of banks. So let's get started. A bank is a financial institution licensed to receive deposits and make loans. There are a total of 8 different types of banks, but there are 3 important ones that we'll cover today that pertain specifically to the financial sector. First off, we have the retail bank. This is the type of bank that you usually imagine when you think of the word bank. Retail banks provide financial services to individuals. It allows individual consumers to manage their money, have access to credit, which is also another term for funds, and deposit their money in a secure manner. These banks usually offer savings, checking accounts, personal loans, mortgages, and debit and credit cards. Commercial banks, on the other hand, provide services to business customers. They accept deposits, offer checking and saving accounts, and make several various loans to businesses. Because businesses and individuals have different needs, commercial banks also offer unique, complex services like offering foreign exchange services for businesses that conduct overseas operations. Then we have investment banks. These are the other type of financial entities that you'll find on Wall Street and in the financial hubs across the world. Investment banks act as a financial intermediaries that perform a variety of services. Most of these banks specialize in large and complex financial transactions, such as underwriting IPOs, acting as an intermediary between a securities issuer and the investing public, facilitating mergers and other corporate reorganizations, and acting as a broker or financial advisor for institutional clients. Basically, investment banks serve as a bridge between the business world and the general public. These are three major types of banks that you should get familiar with. In Unit 3, when we talk about government and politics, we'll also go over another type of bank, the central bank. Now I'll hand it over to Rukmini, and she will talk about banking industries and balance spreads.
So banking can sound really boring, but the industry is a seriously profitable business. In 2018, the total assets of the 1,000 top world banks reached $124 trillion. So what is this industry all about? So the banking sector is an industry and a sector of the economy devoted to the holding of financial assets for others and investing those financial assets as a leveraged way to create more wealth. So let's kind of break down that definition a little bit. So the first part, it says the holding of financial assets, and this is the core of all banking. So a bank holds assets, which are also known as deposits for clients, giving the client freedom to withdraw any money that they had previously deposited. In the definition, the second part says that the financial assets are invested as a leveraged way to create more wealth. This is referring to the way that banks make money. When a bank gives out a loan, the money will be paid back over time with an additional interest rate. Banks also invest in government securities that also help them make money. So for the client safety, there is a lot of legislation that regulates banks on what they can invest in. Between 2007 and 2009, there was a huge global financial crisis involving the meltdown and the subsequent collapse of the American mortgage market. One of the potential causes of the crisis that is often sprouted is the decades of bank deregulation that had been occurring before the financial crisis. Banks are a huge part of our economy, which is why they need to be regulated to an extent. So catastrophes like the financial crisis of 2008 won't happen again. Legislation restricting and explaining what the bank can do and can't do is critical for the state of the economy and the individual clients. So we'll talk a little bit more about financial regulation next week when we start our final unit on government and politics. So the next topic that I'll be talking about is balance sheets. So balance sheets are a financial statement that reports a company's assets, liabilities, and equity. Assets are resources that the company owns that have potential monetary value. Liabilities are future economic sacrifices that the company is obligated to make due to past transactions. And equity is a degree of ownership in any asset after subtracting all debts associated with that asset. So what are balance sheets used for? Balance sheets allow people to predict the nature of the company and observe the state that it's currently in. Often they're not looked at alone, but in comparison to other balance sheets from that company from a previous period or balance sheets of other related companies. So they're used in the stock market to predict trends and also show the state of the company on paper. So banks also use balance sheets to keep track of their finances. Shown here is the basics of a balance sheet that a bank will have. On the asset side, you have the money that the banks receive from deposits. We'll go over that more in the next slide. So when you have loans, securities, and physical assets that the bank may own. On the liability side, you have the checkable deposits. This makes sense because the bank still owes people who put money into the bank their money, so paying their clients back is a liability. There are also other types of deposits and liabilities that the bank may have. Finally, you have the equity, which is the value of assets minus the liabilities.
All right, so does that I know like balance sheets and like assets, liabilities, and equity like is kind of like a complex, like it's a pretty nuanced topic once you first start getting into it. So are there any questions before I talk about um, a unique part of banking that involves balance sheets? Because I want to understand like that you guys understand this part before we move on. All right. All right. So let's talk about the fractional reserve system. So most banks around the world use this fractional reserve system. So what does this mean? Well, essentially, it means that banks can basically create and destroy money out of thin air. So fractional reserve banking allows banks to keep only some of the fraction of their departments and loan out the rest. So this practice can increase the total money supply in the economy. So to get a better understanding of how the fractional reserve system works, let's picture a bank. So like I have one right here. So let's say that the Federal Reserve, the central bank of the United States, sets the reserve ratio at 10%. So client A comes into the bank and deposits $100 into his checking account. So legally, the bank has to keep 10% of its deposits in the bank's reserves. So 10% of his $100 is $10. So $10 of his $100 is called the required reserve. The bank is required to keep this $10, these $10 in their reserves, and the other $90 is called the excess reserves. So that means that the bank doesn't have to sit on this money and that they can lend it out. So then say client B comes to the bank asking for a personal loan, and client B is a pretty trustworthy borrower. He has a really high credit score. So the bank gives them a $90 loan to be paid back with interest over time. So now look what has happened. Client A still has the $100 in deposits that is guaranteed by the bank. So if they come back to get their $100, the bank will give it to them electronically because deposits are insured by the FDIC, the Federal Deposit Insurance Corporation. But now, client B also has the $90 from their new loan from the bank. So both client A has $100, client B has $90. So the money supply in this case has grown from $100 to $190, all thanks to the fractional reserve system. So I guess the question now is like, does this cause inflation? Well, it would make sense because there's more money being added, so prices will rise, right? But studies and like data have shown that although the system allows banks to create and destroy money, the amount of money created is proportional to the assets in the economy. So simply put, the fractional reserve system does not cause inflation. And we'll talk more about banking and financial regulation next week. But in general, this system is just really good for allowing more people to get more money. Because at first, client A only had $100, but now client B also has $90, while client A still gets to keep their $100. So in total, the money supply has increased. So let's see. All right, I guess we're kind of switching up the order for today. So we're going to do a Kahoot first, and then we're going to have our guest speaker. So let's see. Can you guys hear the audio? All right, we'll get started with some of you guys can join in as we play. So question number 1, where is Wall Street located? It's good that you guys all got that one. Yes, Wall Street is located in New York City, the financial capital of the world. True or false? You as an individual can trade stocks through an auction stock exchange directly. Yeah, so this one is false. You as an individual can't actually trade stocks through an auction stock exchange. Does anyone know which financial entity you would have to contact to try to get through to the stock exchanges? Yeah, Ishan's right. Yeah, a broker, a brokerage company. They serve as the middleman between you as an individual and the stock exchanges. So I think I kind of just answered this question. Yeah, a brokerage company allows you to, exchange, basically place orders through to the stock exchange. All right, question 4. Mutual funds are especially advantageous in what regard? Yeah, so the correct answer is that mutual funds are diversified and they're professionally managed. So that means that you don't, you as an individual don't have to offer any input. A lot of you guys answered, all right, let's just take a look at each of the answers here. So higher returns compared to stocks. Well, that's not necessarily true because mutual funds they're made up of various stocks. So like placing all these stocks together doesn't like inherently make them have higher returns. And then a lot of you guys picked no risk compared to stocks. It is true that by diversifying, you are lowering the amount of idiosyncratic risk that the asset would take on. However, there's like no such thing as like no risk. Or at least like in the case of mutual funds, there's never like an asset that has no risk. And then finally, high fees. I think that mutual funds have quite low fees actually, and that's what makes them advantageous. So high fees would not be something that an investor wants. All right, question 5. Where can you go to apply for a mortgage, which is also a loan for a house? And most of you guys got this one. Yeah, you would go to a retail bank to apply for a mortgage because retail banks serve individuals. All right, what is one role that investment banks can play? Well, okay. So yeah, a lot of diversity in these answers, and that's not good. So a lot of you guys picked credit card provider. No, so investment banks, remember, they're the ones that do the complex financial transactions with the financial entities and with individuals like us. So they wouldn't be interacting with individuals like us like a retail bank would. So they wouldn't be the ones that provide credit cards. they also wouldn't be the ones that like originate, which is also like another word for like issuing. They wouldn't be the ones that give us personal loans either, because investment banks don't deal with that stuff. Retail banks do, and also mortgages as well. So credit card providing, being an originator for personal loans and mortgages, those are all things that a retail bank would do. However, one thing that the investment banks do is they underwrite IPOs, which means that I remember. Does anyone know what IPO stands for? This is kind of a throwback to week one. All right, no one. All right, so an IPO. No, you're good. So an IPO is an initial public offering. So basically, it's when remember, it's when a company first decides to go public, and it's when they first decide to issue stocks. So, um, an underwriter for the IPO basically preps that company for going public, for starting that IPO. So they deal with all like the legal work. They deal with trying to make sure that the company jumps through all the hurdles so then they can go public. So that's what investment banks can do. They underwrite the IPO, and then usually they receive some commission or like a percentage of the profits that the company that has gone public gets. So next question. All right, true or false? If you want a loan for your business, you go to a commercial bank. Yeah, this is good. Yeah, most of you guys got this one. So if you want to go to a loan for a business, you would definitely go to a commercial bank. They serve businesses. All right, question 8. As of 2018, the banking industry's top 1,000 banks held a total of how much in assets? Yeah, 124 trillion. A pretty big number. I think 3 or 4 times greater than the current GDP of the United States, but don't fact check me on that one. I'm not too sure. All right, assets equal. Yeah, a lot of you guys got this one. So yes, assets equal liabilities plus equity. So equity is basically what's left. So um, equity assets is what you like kind of own that has like value. Liabilities is what you owe. So then if you have what you own subtracted by what you owe, then you're left with your equity. All right, question 10. For a bank's balance sheet, checkable deposits are considered yeah, they are considered a liability because once, let's say, like I deposit $100 into a bank, well, now the bank is liable to pay me $100 plus whatever interest that I might have on the account. Well, once I request it, so like the banks are liable to pay me back once I give them the money. All right, question 11. The fractional reserve system allows banks to do what? Yeah, so most of you guys got this one. The fractional reserve system allows banks to influence the money supply. So they can increase it, they can decrease it. They wouldn't be able to, they're not going to be able to print money. That's a job for the US Mint. Basically, they can create money out of thin air, like because a lot of stuff is like a lot of banking now is all electronic. So, that's where it all comes from. You wouldn't print actual physical money. All right, question 12. Which entity sets the reserve ratio? And this is something that we're going to touch on in our last week as well, once we talk about fiscal and monetary policy. Yeah, so the Federal Reserve, the central bank of the United States, they're the ones that set the reserve ratio. All right, question 13. Who's the current chairman of the Federal Reserve? I remember this is a question that we had a while back, so yeah, so Jerome Powell is the current chairman of the Federal Reserve. A lot of guys picked Steve Mnuchin. He is actually the current Secretary of the Treasury. So similar jobs, but we'll distinguish them in the next 2 weeks once we talk about government and politics. In question 14, which US-based company just received actually $2 billion from the government to produce a coronavirus vaccine? This is something that if you read the news, you'll know. Yeah, so Pfizer actually just did, and they also received the $2 billion with another German-based company, I believe, called BioNTech. But yeah, basically the government is paying them to try to get a coronavirus vaccine by the end of the year. So hopefully we'll be able to return to school then. All right, last question. At what time does the stock market open every day? Very straightforward. All right, yeah. It opens at 9:30 a.m. and it closes at what time? Do you guys know? Yeah, it closes at yeah, Anna and Nishan got it. It closes at 4. So it goes from 9:30 to 4, with the exceptions of weekends and national holidays. All right. So let's take a look at who won. All right, congrats to chapter 55, period and Anna. Does chapter 55 and period want to identify themselves, or are you guys gonna stay anonymous? All right. So now we have let's see. Now we have Helen, our guest speaker. She is a research professor at the University of Michigan in the Department of Health Management and Policy, and I think she will sort of talk about what she does and maybe enlighten us on how the current pandemic is playing out in terms of socioeconomics and all that. So, Helen, you there?
Yes, I'm here.
All right, lovely. So, is there anything you want to talk about before we do some Q&A?
If you guys have questions prepared, I'm happy to have you start with those. I'm also happy to talk about sort of what health economics is, why use economic tools to study health and healthcare, but it's totally up to you guys.
All right, yeah. So I think I guess you can sort of talk about what you want to, and then I think work committee has some questions. And if you guys want to type in the chat or use the Q&A function, yeah, we'll try to get to those as well. So I guess you guys can take it away.
Okay, so let me talk a little bit about how economics gets applied to the healthcare sector, since that's what I do in my research. And so if you've been thinking about economics for a little while, you're probably familiar with the idea that economics is about the fact that human resources are limited and human wants are unlimited. So that's kind of the short cliche explanation of what it is that economics studies and why. And that tension is more painfully evident, I think, in healthcare than anywhere else. In healthcare and health, additional resources can literally be the difference between life and death. In spite of that sort of emotional framing of questions about medical care, there's a lot of evidence that people, both individually and as a society, make trade-offs between healthcare and other goods. And those trade-offs look a lot like the trade-offs that they make about other goods and services. So for example, if the price of healthcare goes up, people consume less of it. And as a society in the US, we don't necessarily make the same healthcare available to everyone. People with more resources get better care. So you can debate the ethics of having a system that functions like that, but you can't ignore the fact that markets for health and healthcare exist, and health and medical care are goods in the sense that they largely obey the laws of supply and demand, with the really important caveat that anything that can go wrong in markets does go wrong in health and healthcare markets. So they're totally fascinating markets to study because unlike, say, commodity markets, healthcare is not a uniform good, and there are all sorts of things like information problems, uncertainty, high costs of entry, all of the things that we think make it difficult for markets to do a good job allocating resources. Basically, all of those come up in healthcare. So it's a totally fascinating market to study if you're interested in thinking about how government intervention can make the allocation of resources more efficient or more equitable. Since that's basically the question in economics all the time, is how good a job do markets do allocating resources? So I'll just mention one example of that, since you guys were just talking about it in the Kahoot that you did, which was the idea of developing a vaccine in response to coronavirus. The research that goes into the development of a vaccine is a classic example of a public good that if you leave it to the private market to develop a vaccine, you would have a bunch of private companies with no incentive to share the information that goes into developing the vaccine. And you would also face a situation when the vaccine was developed of those companies auctioning the vaccines to the highest bidders. And that's why you see government stepping in this case and sort of solving that problem as a society collectively by providing government money to support the development of a vaccine that will then be available, presumably to everyone, although there are lots of questions about how that's going to unfold. Why don't I stop there and let you guys ask questions about whatever part of this or about being an economist that you want to ask about, because that may be more interesting for you guys.
Yeah, Rukmini, did you have your questions?
Yeah, I can ask my questions. So I guess I was just wondering, like, how you kind of got into this field, and like, did you always know you had a passion for economics, or like, how did you kind of get into this?
So I hated economics when I was first exposed to it. I tried taking it in college because I thought it was like a thing you were supposed to take, just like introductory art history or whatever. But I just hated it because it was so abstract. So this guy was up at the front of the lecture hall talking about guns and butter. And I was like, what is he talking about? At the same time, I was possibly interested in becoming a doctor, and I was volunteering in the hospital in the city where I went to college, and it's quite a poor city. And I could not get over the disparities within the hospital between like the fancy parts of the hospital and the Medicaid clinic where I was volunteering. And it blew my mind that you could have that unbelievable disparity in access to resources literally within a single hospital. And I ultimately connected that interest in who gets access to what to economics. But I didn't actually make that connection until after college. So I didn't end up taking any economics as an undergraduate, but I did get a PhD in economics ultimately. So that was what, other people helped me make that connection ultimately.
Got it. If anybody else doesn't have any questions, I guess I have another one. Are there any like big events that have happened in like the field of health economics, or is that like pretty unheard of?
So the biggest thing in the time that I've been doing this was the Affordable Care Act, which passed 10 years ago. And so that's a long time ago in terms of your lives. But basically, the idea behind the Affordable Care Act was to give more people access to health insurance to help them pay medical bills, to reduce some of those types of disparities that I observed in the hospital. And it has been very effective because before the Affordable Care Act, there were about 50 million people in the US without health insurance. And the Affordable Care Act helped about 20 million of them get insurance. Here in Michigan, something like 750,000 people got health insurance because of the Affordable Care Act. So that was a big deal, and people have spent the 6 years since the major law changes that went into effect because of the Affordable Care Act studying, like, what did that do for the people who gained coverage? And it kind of confirmed what we knew, which is that if you have health insurance coverage, you get better access to care, your health is better, you're less likely to declare bankruptcy, to have debts referred to collection. So having health insurance improves people's access to medical care, their health, and also their financial well-being, which is kind of what we thought it would do, and it has.
Yeah, I'm Ryan. Do you have any other questions?
Yeah, I'm intrigued because it seems like healthcare in general in the United States, like everyone can agree, or at least like mostly everyone will agree that it's kind of a mess and that it's a system that definitely needs revamping. But then you see like on both sides of the political spectrum, they're like trying to pull it in different ways. And like they're always saying like, yeah, we need reform, like repeal this, install that. But it seems like they're both trying to go in different directions. Is there like a solution, a particular like solution, or like even just like a component that you would recommend in improving our healthcare system?
Yeah. So I think there are things people agree on and there are things people don't agree on. And the central thing people don't agree on is how much should we do for people who can't, who don't make enough money to pay for their own health insurance, right? And that mirrors a lot of debates in our society about how generous we want our social welfare systems to be. So that's like literally going on right now in these debates about the coronavirus relief package. Like, do we continue paying additional unemployment benefits to people who've lost their jobs? Should we be providing health insurance, government health insurance for people who've lost jobs? That's a highly contentious area within healthcare, and I don't see that tension being resolved anytime soon. The types of things that people agree on are first, that health insurance markets create a problem for small businesses. This is like a little bit in the weeds, but everyone can agree that if you're a big firm like the University of Michigan, it's relatively easy to provide health insurance to your employees because you have so many of them that you're going to be able to predict on average how much insurance is going to cost. Like, law of large numbers, it gets pretty predictable. But if you're a small business, it can be really hard to buy insurance. And so sort of even the conservatives get that is a problem. And the Affordable Care Act tried kind of unsuccessfully to do some stuff about that. And the other thing everybody sort of agrees with is that we need to figure out a way to set up systems that the government pays for a lot of healthcare. And we need to figure out how to do a better job of paying for things that are high quality and really necessary, and not paying for when things go wrong, or setting up incentives to not pay when things go badly. So everyone kind of agrees on that as a principle. It's been very, very hard to find a way to do it. But those are some of the central questions that people struggle with in health economics. Oh, this is a great question I see in the chat. Would you think of your work as hard? No, it is super enjoyable, and it's also really easy. So the other thing I like about being an economist, and I know many of you have parents who are doctors, and I admire them so much, but like I could not handle that kind of stress of having a bad day at the office, being like someone dying, or like having to tell someone they have a terminal illness. As an economist, my idea of a bad day at the office is like I did something stupid, or I couldn't get my computer program to work. So I love that, right? And obviously that is a very like personal choice about what you like and what you look for in your work. I don't need to be a superhero. I admire the people who are, but no, my job is like super enjoyable and by my standards, quite easy, if that answers that very good question. The question was, would you think of your work as hard?
Yeah, and I would also add like the difficulty of your like the of your of the profession that you decide to go into really also like depends on like whether you enjoy your career as well. So like if you want to become a doctor, then I feel like I think it can make your work a bit more, it will take some more pressure off the work that you're doing, and like the stress that you might be experiencing because you're doing your dream job and all that. Like I can never like imagine myself being a lawyer. I feel like that could be like really, I think like that kind of stuff would be really hard. But if someone does like want to go into that kind of stuff, then I don't think that it would be as hard for them. It's just it's a matter of preference.
Totally. It's all about finding the thing that is right for you. So there's no like, this thing is better than that other thing. And actually the interesting thing to me about that choice, especially at the stage you guys are at, is you don't see as wide a range of jobs as exist in the world until you've been out of school for a little while. So I always encourage people not to go to grad school right away, not to try to pick while they're still in college, what they're going to go into, but just to major in something that's really useful in a lot of different fields potentially, and see a little bit of the world before you decide what path you're taking. Because I absolutely agree, there's no substitute for loving what you do and finding the thing that's right for you. And I have friends who are doctors who love what they do. I have friends who are lawyers who love what they do. I have friends who are artists who love what they do. And it's just, totally about what you want to do. Okay. Do you think that everyone or most people would think of it as easy and fun like you do? No, I think most people are super bored by it. I know that for a fact because I sometimes teach it, and I get student comments that are like, this was way less boring than I thought it would be. And also I constantly am boring members of my family by talking about economics. So, no one else in my family is an economist. And I would put money on it that my kids are not going to be economists. So it's for sure just about what you're interested in. And so in my case, like I find other economists to talk to about this stuff, and we all have a good time nerding out together. And that's what it's all about.
Ryan, you're muted.
I was just asking if anyone has more questions, but it seems like one popped up right now.
So someone says, so you recommend going into college blind. What does that mean? What do you mean by that exactly?
I'm guessing just like not knowing which direction you want to take.
Yeah, so I would say open-minded would be my characterization of the way to go in. And I think, like I said, I would never have picked economics based on what I saw of it, even in college. So keeping an open mind about stuff and reading widely, um, learning what people do, who are not necessarily the people that you run into, just outside your family. That's important too. That's another really important thing. And I noticed in college, in grad school, obviously I'm surrounded by other people who are becoming economists. People had really different sort of family reactions to the fact that they were becoming economists. So some people had parents with a background in something like banking or finance, and they're thrilled that their kids are becoming economists. My parents were both humanities professors, and they were like, "You're doing what?" Another friend of mine in grad school, his family had a family-owned plumbing company. His three older brothers all worked for it, and his family was like, "When are you going to stop this nonsense and come back and do the books for the family business? Because you're the one who's good with numbers." And he had to be like, "No, I'm doing this other thing." And he's now a professor at Wharton, so he's like good at this thing. But everybody has a different set of expectations around their choices, and you have to figure it out for yourself. Okay, when is it good to start thinking about college? And is my department big? Okay, my department is so I'm at the Institute for Social Research, not in the econ department. The Michigan econ department is pretty big. It's like 30 or 40 faculty, and it's a huge major. I don't think it's the largest major anymore, but it's close to it at U of M. And at all schools, econ is always a very popular major. What age do you think it is good to start thinking? Oh, Ryan, did you want to weigh in on that one?
I think it varies because as someone in high school, and I think Rukmini definitely know this, I think I started on the earlier side. I mean, I started thinking about college like way in like almost middle school. I was just thinking like, what direction do I want to take in life? Like so far, like a large percentage of my life has been within the educational system, within schooling. So like what's going to happen once I step out? What's going to happen when, there's no more grades, there's no more teachers, there's no more, assignments. And I've just been thinking about that ever since. In terms of college, I think that I'm just thinking like once you start high school, just like start keeping that in the back of your mind and, make it a greater priority as time goes on. But I mean, that's what I've been trying to do. But also I definitely like thought way too much about college last year, and I'm trying to like scale it back a bit now because like it's important to think about college, but also like you want to like enjoy high school while you can, enjoy middle school while you can. Like just don't let it pass by while you're like too fixated on college. That's what I'll have to say.
Yeah, I try to prevent my children from thinking about college. My older one is going to be a freshman this year, and I would like him to not think about it for several more, like maybe 3 more years, because I think when you're in high school, it starts to feel like college is like the ultimate goal, but actually it's just the beginning. So finding the things that are actually interesting to you is like much more important for being happy and interested in your life than going to a particular college. It's also true. So one other, so I have 2 stepdaughters who, one is graduated from college, one is going to be a senior this year, and then I have 2 kids who are younger than that. And it strikes me that there's also not like there are rankings of colleges. Like you can go look them up. You've seen them, I'm sure. But it's actually what's much more important is to find the one that's right for you. And I know college counselors say that, but it really is true because there is no substitute for being in the place that's right for you, whether that's a big place, a small place, a diverse place with tons of different majors like the U of M, or a place with a narrower offering, but where you can actually like sit in a classroom with your professors. So I think you want to not spend all your time worrying about getting into a particular place, but just think about where you're going to be happy and engaged, because that's what makes for a productive and successful and happy person.
All right, yeah. I think if there's no more questions, I think we can call it there. Really good stuff. Thank you for coming in, Helen.
Yeah,
Okay.
thank you.
Thanks a lot, guys. Bye.
Bye.
All right, and I'll see you guys next week, same time, and we're gonna start on Unit 3. We basically have 2 weeks left now. Next week we're gonna talk about financial regulation, and then finally on the last week we're gonna talk about monetary and fiscal policy. So see you guys. Have a great weekend.